Let's ask you first then, assets of clients that you advise grew as an excellent performance, in your words, at its funds unit, exceeds targets for net new money. Explain the success. What's behind what you've described as an excellent performance?
First of all, it's client focus. It's the quality of our services and our products. And now, over the years, we have built a reputation of being close to our clients, delivering specialized services. And we keep gaining market share, and we keep having happy clients that recommend us, and that makes us very proud.
Zeno, you've obviously very focused on the clients. It's great to bring money in, net new money in, but the perennial issue is making those clients engage and put their money to work. Are clients doing that? Are they showing any hesitation? What kind of margin are you delivering on that new money in?
Yeah, we have stable margins also on net new money. Second, we are predominantly an asset manager, which means that we have recurring management fees, both for private as well as for institutional clients. Whereas on those clients who run an advisory relationship with us, we still see significant cash holdings, which are at around a quarter to a third of their assets with us.
OK, a quarter to a third. Zeno, in terms of where clients want to put their money and how actively or passively they want it to be managed, do you think we've reached peak passive? Is it way too soon to say that we've reached a peak in that demand for passive strategies?
That's a tough question, but it's not a relevant question for us. We are a dedicated, high-conviction, active asset manager. We are confident that by being selective, we will continue to add value to our clients. Economic theory tells us that we will never go 100% passive, and we will never go 100% active, so the market will continue to look for an equilibrium. But we, as a focused player, will continue to remain committed to our way of the investment game, which is high conviction active.
Zeno, can I ask you, you've made it clear that you have got cash for acquisitions. We understand predominantly in Switzerland. Would you like to expand your presence in Geneva? I mean, do you see that landscape consolidating more? You're poised to act.
Yes, so to quickly lay out our acquisition strategy, we are very willing, and we have executed over the last 3 years 4 times. We are in the process of completing our 4th acquisition in less than 24 months. We're open for acquisition on the asset management side, where we're also more open to international acquisitions. We have, for example, been able to become the majority shareholder of 24 Asset Management, a very dedicated, bespoke fixed income manager in London. Whereas on the wealth management side, as you rightly pointed out, we are focused on Switzerland. We still would expect that the Swiss landscape keeps changing. There will be both a silent and an M&A-driven consolidation. We're an active consolidator, and we're open to do that also in Geneva.
OK, so consolidation in Geneva, really a theme then, Zeno. Another theme in your industry, of course, is technology, automation, artificial intelligence being employed by many in your industry. To what extent are you relying on AI, and will you? And which types of jobs do you see at risk as a result?
Yeah, so I mean, the question of technology and you, I mean, first of all, perhaps it's fair to remind ourselves that only because the capital asset pricing model, which is economic theory out of the 70s, is recoded by somebody in sneakers, that does not make the approach any better. So as you interview me out of Geneva, I would like to use a French term. We are convinced that le savoir-faire, the know-how in our industry, the experience, the relationship to clients will remain key. We are at the same time heavy endorsing technology, but as a support to make the work of our relationship managers better, to bring them closer to our clients, to be more bespoke in servicing their clients. So technology is a help, but we don't think that in our segment of high-end clients it will replace the human being, it will support the human being. And when we talk about robo-advising more in an affluent space, we think that only providers and companies that have the track record, that have the experience of investing and handling clients, and that have the trust that comes with that track record will be successful going forward. And there is too much of overhyped and but still simplified finance and technology in the market.